What is going on, traders? Welcome back to the Traveling Trader. Today I wanted to talk about my top stock picks for September 2019 with a focus on de-risking your portfolio for the potential upcoming recession. If you saw my previous video on how to prepare for a recession, I'll leave a link somewhere here. You'll see that it is dire, it is critical, it is extremely important to be proactive when preparing yourself for a recession. You don't want to be caught too late with your pants down. Am I wearing pants? Well, I guess you'll never know, but you don't want to be caught too late when the recession finally hits and you have not planned properly. Even Jeff Bezos and Tim Apple, otherwise known as Tim Cook, have already started selling some shares of Apple and of Amazon, a practice that they don't normally partake in. But obviously the reasons for them doing this is the obvious trade war with China, but also the lead up or that could lead up to an actual recession. So selling some shares now in preparation for that is actually smart. And if you look all across the board, well-known wealthy investors are divesting from the stock market and exposing themselves to a bit less risk starting from now. Anyway, if you want some insight as to how to handle the next recession, go check out that video. Otherwise, let's talk about the top stock picks for September 2019. I'll throw a little bit of an obvious caveat here that it doesn't mean that these stocks won't go down at all. But based on previous recessions, these specific companies or the sectors that they are in have fared pretty well in comparison to other companies in the stock market. Obviously, for those that are completely risk averse and want to pull out entirely from the stock market, obviously you can do that. And you can go into something like a T-bill that gives you 2 to 3% a year. But for those that want to expose themselves to a bit more risk, because let's face it, the stock market is the ultimate wealth creator, right? If you want to expose yourself to a bit more risk and not pull out completely from the stock market, take a look at some of these stocks that I'm about to show you. So without further ado, let's go to the other studio because it's a little easier to present on the green screen. All right, guys, I'm back at my desk now. Just as I said in the caveat, there aren't any stocks or investments that will be completely spared from the recession, but these have fared better than others in the stock market. And we'll go over the historical numbers as we step through. So the first one that I'll offer you is GLD. Now, this isn't really a stock of a company. This is an ETF that follows the price of gold. This is actually the biggest gold ETF in the entire world, the SPDR Gold Trust. And if you've been following the trade alerts in our traders group, you'll know that we've been making a killing off of GLD recently as the market is finding some volatility and prices are declining. GLD is looked upon as a safe haven to protect profits against a very volatile stock market currently, right? So GLD is the first one. This is the easiest way to speculate on gold without actually having to buy physical gold. And the SPDR Gold Trust actually goes out and buys gold bullion and has to hold. It's basically a physically backed ETF. They have to have the amount of gold bullion that investors are placing in this ETF, right? So it's a gold backed ETF. And over the last recession, while the S&P 500 lost around 38%, the largest drop since 1931, gold was actually up 24%. And if you want access to those trade alerts, by the way, that link is in the description. You get access to the stock and crypto trade alerts. All right, the next one we'll talk about is Walmart WMT. So if you saw my video on how to protect yourself against an upcoming recession, part of what I talked about was that consumer staples, stocks that are in the consumer staples sector, or as they call it, consumer non-cyclicals, meaning that, you know, consumers have to buy these products and there isn't a cyclical nature to them. No matter what the economy is doing, no matter whether it's Christmas time or not, no matter what happens, there are certain products that families have to buy, right? Whether it's food, beverage, toilet paper, toothpaste, etc. So consumer non-cyclicals or consumer staples are some of the safest stocks that one can invest in during a recession, right? And if we look at Walmart historically, in 2008 during the recession, Walmart was actually up 20% and it outperformed the S&P by almost 60%. Walmart, obviously, they have 11,000 stores worldwide, and it is one of the prime locations where consumers do their consumer staples shopping. Also, because they're so big, they can slash prices. And during economic downturns, Walmart has actually slashed slashed prices in the past. So Walmart is the second stock on this list. Now keep in mind, these are not swing trades. I do send out swing trade alerts, and we definitely do swing trade the market. However, I'm just talking about recession-proof stocks for the long term, meaning you hold these through the recession if you want to expose yourself to the stock market during the recession. So keep that in mind. These are not swing trades. Next one on the list outperformed the S&P 500 during the recession by 99%, and that is DLTR. Not to be confused with TLDR, which is my default response to most text messages. But Dollar Tree outperformed the S&P 500 by 99% the last recession. And in total, in 2008, it gained 61%. This is back to the same logic of them selling consumer staples and also being a discounted store where consumers are likely to pick up cheaper products, especially during a recession. You might not opt for that comfortable ass toilet paper, the Charmin soft stuff. You know what I'm talking about. You might go for the Dollar Tree brand, the one that's probably made out of paper bags, but nonetheless, it's a lot cheaper than the premium stuff. So Dollar Tree and discount stores like it end up performing really well during a recession. All right, the fourth stock on the list is Bud. Anheuser-Busch, yes, the makers of the beer Budweiser. Now, you might be surprised to find that alcohol is also considered a consumer staple. It can be seen as both a consumer staple and an entertainment cost, and definitely during recessions, we see that there are certain forms of entertainment that serve as reprieves for stressed out consumers, and beer is definitely on that list. And Anheuser-Busch in 2008 gained 39% and actually outperformed the S&P 500 by 78%. All right, no further explanation needed there. We can move over to number 5. And number 5 on the list is Amgen. Amgen is a biopharmaceutical company that manufactures things such as cancer drugs, etc. Obviously, things that people need during a recession or not. And Amgen has actually outperformed the last 2 recessions, not just the last one, but we have data to show that Amgen actually outperformed the last 2 recessions in a stellar fashion. In 2008, Amgen gained 24% and ended up beating the S&P 500 by 63%. And then going back to the recession of 2001, Amgen actually grew by 35%. So Amgen continues to show that it is recession-proof as a stock can get. And if you just take a look at Amgen over the long haul, you'll see that it is just one, it actually looks like Bitcoin kind of, but it actually looks like, let me just remove the Bollinger Bands. You'll see it is actually just one straight shot since its inception back here in 1983 was the first time it hit the stock market. So from 83 to 2019, it's just one straight linear trend line up. And another nice thing about this stock is that it pays a healthy dividend, which is something that you also want to consider during a recession that we haven't talked about much in this video. But high dividend stocks, coupled with, if you can look at historical stocks that have performed well during recessions like these ones that I'm giving you, if you couple that with the fact that certain stocks pay high dividend, that is essentially what you want to look for during a recession. And like I said, I mean, you don't have to expose yourself to the stock market. This is just if you don't want to completely remove yourself from the stock market. And most analysts actually say that you shouldn't remove yourself unless you need the liquidity, obviously, but you shouldn't remove yourself completely from the stock market because you are bound to miss what they call the best days. Anyway, those are my list of stocks. If you have any questions about this, if you have an agreement, a disagreement, leave it in the comment section below. If you got any help out of this video, if you like this video, go ahead and leave it a thumbs up. It goes a long way. Subscribe to the channel. Hit that notification bell if you want to join our traders group where we send out swing trades, long-term holds, crypto stocks, options, etc. That link is in the description. It'll cost you less than a cup of coffee a week. I'm also about to remove the Patreon section as I'm building my new site, and the subscriptions are going to be site-based only. And with that, I am going to be raising the prices a little bit. So the Patreon will be your last chance to get those low prices, and I'm going to be grandfathering everybody in who did sign up on the Patreon, but I will close the Patreon for new signups probably within next month or the following month. Let me know, what do you think of this video format and what would you like to see in the next video? Stay safe out there, traders. Peace.